Hello everyone, it's February 10th. This is me, Tyler from Socrates Trading, and today I'm going to discuss with everyone things that you can do to avoid investment fraud. Fraud is such a big issue in the investment industry, and everyone knows stories such as with Bernie Madoff about 10 or 12 years ago, who stole billions from people. And this is one of the biggest issues in investments, and why everyone should know the right precautions and red flags on how to prevent this issue occurring for themselves. Okay, so there's some things that you can do to avoid investment fraud, and the first thing is to ask questions. Fraudsters are counting on you not to investigate before you invest. And you can fend them off by doing your own digging, your own research, and just asking for references, asking for several references just to help validate that this person or institution's legitimate. The second thing is research before you invest. Understand a company's business, services, and products before investing with them, and understand specifically what they're investing in, because businesses and companies can invest in different stocks, different ETFs, and it's unfortunate that sometimes people don't understand what they're investing in. In this case, it may not even be a fraud because people didn't do their due diligence and read the bullet print that they were investing, for example, in a high-risk ETF rather than a more conservative fund. The next thing is know the salesperson. Spend some time checking out the person and getting to know them, and find out the kind of securities this person has sold in the past, and also if they're licensed and what their history is working in this industry. These are all things that are vital. At the end of the day, the person who's selling is a salesperson like in any other industry, and people wouldn't think anything of questioning a car salesman or a makeup salesperson. They would be immediately questioning the motives, and it shouldn't be anything less with a stock salesperson or a mutual fund broker. These people at the end of the day are salespeople, and that's why there has to be some understanding here. The next thing is to be wary of unsolicited offers. Be especially careful if you receive an unsolicited pitch and to invest in this company, and see if you can find financial information about this person or company, because it could be a whole multitude of schemes or scams that this company or person wants you to invest in. And that's why often the best investments are the ones you have to find. They won't be solicited because the people that, or companies that know what they're doing, often have so much positive feedback from customers, they don't need to make a lot of unsolicited offers to get new business. The next thing is protect yourself online. There's a multitude of fraudsters online, and this is actually one of the major ways they operate in the 21st century. And it's important to know that there's a black market also, and these fraudsters can also sell people's account numbers. They can sell all sorts of high value information to people. Now, there's some red flags also that should be included in this. And some common red flags are probably things you understand or have heard, but it's no different with these areas. And the first is, if it sounds too good to be true, it is. Often, if a company is promising like 40 or 60% returns year after year, that's impossible, honestly. This is too good to be true, and it's often like this in investment realm. The next thing is guaranteed returns. There's no such thing as guaranteed return. This is ridiculous, and every investment carries some degree of risk with it. And it's always going to be understood that a good rate of return will never exceed a ridiculous sounding amount. So this is kind of common sense. The next thing is to be aware of the halo effect. Con artists are very clever at utilizing the halo effect, and they'll come off as likable and trustworthy. They can actually have what appear to be credentials, which could also be fake. So understand that this is a common practice. And the next thing is understand the tool of reciprocity. Fraudsters often lure investors through free investment seminars, and if they act like they do you a favor, you'll be more likely to return something. So this is a very common old school tactic, and it's best to understand that this will often lead to a fraud. These are all aspects to understand when investing, and just be aware of these precautions when you go about and work with people and companies in the future.